I don't think we're going to get a very clear message. Powell doesn't speak in very clear economic terms for good reasons, probably. But it is interesting. There's been a shift, right? A year ago, Jim Pollard was the only one who talked about the flattening curve as something you should worry about. As late as in December, Janet Yellen, sort of in her last press conference, sort of dismissed it. And then in the last minutes we got from them, you saw clearly that now there are several members who are starting to worry about it. He may change the tone ever so slightly, but I suspect that it's going to be certainly not a clear message.
You mentioned there Janet Yellen's last press conference. I think it was that last question she answered where she talked about there's a distinction between correlation and causation.
Correct.
And that's what we're talking about here. So do you think this idea, and you go back over the last 50, 60 years, you look at that flattening yield curve, you look at that inversion beyond that point as a canary in the coal mine, as it were. Do you buy this argument that this time around it's not a useful anticipatory tool?
No, I don't. If you historically, since 1960, it has 7 out of 8 times of the recessions we have had an inversion before. It doesn't mean the inversion of the curve triggers the recession. There could be a third element that sort of drives two things at the same time. When you get that degree of correlation or coincidence, you have to sit up and watch. That said, of course, the term premium, we know it's lower, and there are things going on with the balance sheet, as you talked about early on in the previous program. So there are a lot of issues, and there is a possibility that it could invert and nothing happens on the economy. But it rhymes with the economic models we do on use labor market data and other things that suggest that there is a potential recession on the horizon, maybe 18 months, 2 years out or thereabout. But I wouldn't. You can't dismiss it.
So that's the future. What about the here and now? The numbers we've been getting, the data we've been getting from Europe and the US, do they suggest that the global economy is in as great a shape as they are being interpreted?
I think the latest numbers we've gotten certainly suggest that you have the first quarter was a blip in a sense, and things are stabilizing again. But my point is, don't get too carried away with good numbers right now. In America, you are being stimulated by this enormous fiscal expansion in the middle of it, and that's not going to last forever. So the question, if you are an investor, is how long time do you remain invested if you buy the fundamental story that sometime next year you get a slowdown as we move towards a recession 12 months later? That's usually the time when the market doesn't like it anymore. But as an analyst, I don't like to tell our clients to say, look, the economy is fine here to here the next 6 months or thereabout, but then they're trouble. Because if I can see that trouble, usually the market can see it before that.
Well, I mean, that's the thing. So you talk about market signaling there. I mean, do you think that Kashgari's suggestion, let's chill out, let's slow down, let's not have any more rate hikes anytime in the near future, do you think that's the answer given the signals the market's giving at the moment?
Yeah, I would. If I were a FOMC member, I would slow it down, because I think we have seen again and again that the reason why the curve normally flattens and then inverts is that the Fed keep on going too long, right? Yes, inflation is a little bit high, but what is the big deal? But they have a fantastically difficult job, because they have the second longest recovery or expansion in history. Then they have this enormously expansive fiscal policy at the top of the cycle, which we don't quite know how that plays through to the growth numbers, because it's so unusual. And then you have the trade story, right? So you have enormously conflicting signals from policymaking. So it's a tough job.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now, to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.